And we're just halfway through in the trading day, and the Dow has taken a tumble, some 350 points. Mixed economic data and poor earning data seem to be dragging stocks down. But what will the rest of the day hold? Hello, everyone. I'm Michelle Franzen in New York, here to try and make sense of a little bit of this. Jeff Mackey of Yahoo Finance. Hi, Jeff.
Hi. I wish we all would have stayed in bed this morning.
I know. So weather doesn't seem to be a factor here today. So what's going on with the markets?
Well, it looks worse than it might in fact be under the surface. The Dow Jones Industrial Average is down as much as just almost 400 points, which is a huge, big headline. Bad earnings, basically. Fundamentals not looking so good for Microsoft this morning in particular. Caterpillar, another company that came out and disappointed, those shares getting smacked around by about 10%. We had some weak economic data and just kind of a lot of post-big run jitters out there. But keep in mind, we're less than 5% off the highs that we made some 3-4 weeks ago. So this is really not as all bad as all that.
Yeah, it's still above 17,000. But you mentioned Caterpillar, you mentioned Microsoft. Give us an idea of what's going on with those companies and stocks. And what are you concerned about?
Well, Caterpillar is a global growth story. And so what they said in their earnings call was that they expected the global economy to not grow very fast over 2015, and that obviously is going to crimp their earnings. They're a cyclical company, meaning that when the global economy is doing great, people build a lot of stuff, they dig a lot of holes, use a lot of Caterpillar equipment. And so you don't hold that so much against Caterpillar themselves, but you add into it Microsoft, well, they're kind of trying to transition out of being the company where they put the software and just about everything you hold to something different. It's been an interesting transition for them. They've done quite well for the last year under the new CEO, but the honeymoon's over a little bit, and now it's time for the company to start put up some real numbers, and they're just not seeing it happen either. It's really, when you get right down to it, it's the global economy is not giving the U.S. multinationals that buffer that they need to take advantage of a still fairly decent economy in the United States.
All right, let's talk a little bit about that decent economy. Economic data, though, a bit mixed. Consumer confidence is up, but orders for durable goods seem to be down. Is this all just a bunch of static in the whole big scheme?
Oh, yeah. If you want me to badmouth economic data, I can do that for you all day. Of course it is. Absolutely. It's like trying to measure global warming by standing with a Dixie cup under a glacier. You take these little drops and you impute large conclusions from them. It is interesting, though, that consumers are more confident now than they have been at any point since before the Great Recession, just as economic data is turning lower. And so you wouldn't expect that durable goods order that measures things like refrigerators, but also things like jumbo jets. So it's a pretty bumpy number that you don't really expect it to be too stable. But then again, you start adding up these weak numbers and eventually they start to matter. And what we're probably going to see over the next few weeks is the digestion of this idea, again, that the global economy isn't going to be that great. In my world, it's not so much about the news from the companies, it's about the reaction of the markets. Overall today, notwithstanding, the reaction's been fairly good to what looks like a turn down in the global economy. But really, there's no reason to get excited and buy stocks anyway, even if the trains and automobiles had been open this morning for anyone to get to work down on Wall Street. But plenty of action still going on the virtual trading side of things. It's a little bit of a setback, but the panic hasn't set in yet, and I don't think there's any reason for the folks at home to get too itchy just yet.
All right, so what do you think is going to happen this afternoon in these hours of trading? Do you think it's going to turn itself around, or are we going to be in for a little bit more pain?
I think I'm not expecting anything great going on this afternoon. We've got Apple after the bell. Now, Apple's a real live company. Microsoft, you can understand some mistakes there. Caterpillar, as I said, it's cyclical. Apple doesn't have any excuses at this point. We need to see some big numbers out of Apple to restore our faith in this growth economy that we all believe in. I don't know about you, but everyone I know has an iPhone 6 or just some almost religious beliefs against owning Apple products to explain why they don't. We've got our tablets. Apple has to come in big tonight, and no one's going to get too brave ahead of that number, not with the stock prices acting the way they are.
All right, and we'll all be back taking a look at it later on today at Story Stock. Jeff Mackey from Yahoo Finance, thanks for joining us. And you, of course, can keep up with this story in real time by downloading the ABC News app and starring this story for exclusive updates on the go. For now, I'm Michelle Franzen in New York.